So moving forward, continuing with the equilibrium concept. So that's what we want to move forward with. We want to see, okay, it has now been proven to us that buying is happening below equilibrium. We're already at a deep discount in terms of the higher time frame, right, on the monthly chart between,
Right.
so we know that, we have that in mind, right? Yes, price is in a downtrend, right? And but that's important to know, right? If you're a beginner, it's like you want to trade with the trend, right? So, but this is so going forward for me, I always try to go against herd mentality.
Yeah,
Right?
no. Herding in markets is incredibly powerful. I mean, I've created the market timer spreadsheet at Strong Market all around herding. It really does measure the herding in at least in the stock market. I haven't figured out a way to do it on Forex, but in the stock market, I can measure herding, and it is very, very powerful. I think people just kind of animals. I mean, animals herd. Humans are animals, really, and they tend to herd as well.
Yeah. So I would say the best thing to do here is, if you're looking for the bottom, is to just get it out of your mind. You're not going to find the bottom. Okay, just stop trying to find the bottom. That there's going to be an abundance of opportunities to trade with smart money if they begin to move the market, right? So to try to get in here on that little consolidation and buy that, well, that's great, but the chances are that you're going to get stopped out, right? And the price is going to, if you're down there in the hourly chart, looking at the hourly chart, and you're watching it all, seeing a big, seeing those heavy, massive bars get created, it's going to mess with your psychology, right? So I think it's important that once you have already established where the higher time frame important equilibrium is at, and then you see price begin to do what it does, don't get in a hurry. Just let them accumulate a bit, and maybe distribute up at an old high, internal high, such as right here, as we saw in the lower time frame. And then you're like, okay, all right, so it looks like, we might be able to get some opportunities to trade here. So then what I do is, as I start to watch price begin to make its way up, okay, again, I say, where is the nearest liquidity? So there's going to be liquidity at all stopping points here. This high, there's going to be liquidity here. Of course, there's going to be liquidity up here. Just look at that shelf right there. Imagine everybody who's short from here, right? Well, they're just looking at this, right? And then there's going to be some who are also going to look over here and see this over here, right? They're going to say, support. And so they're going to put their stops like right up here too, right? So there's going to be a whole bunch of liquidity in the marketplace. All right. So let me talk about what I mean by wide range bars and wide range accumulative bars, because that's what that means. Wide range bars.
Okay.
Right? So a wide range bar are these. That's a wide range bar, right? See how it's got a wide range in relation to like right here, it was these are short range. These are very small ranges. This is a bit of a wide range, right? So, and if we talk about a candle, what is a candle? A candle is just a unit of price being recorded in time. Okay, so this is 1 day, and it consists of an open, a high, a low, and a close. Now, if I could make a 2-day chart, then this candle right here and this candle right here would become one candle in essence, right?
Right.
So, and you can see I can do that up here. I can go in here and I can create a custom chart, and I've got a 3-day chart, a 4-day chart, So this right here, so you see this move right down right here?
Mm-hmm.
And what I had said earlier is, okay, is smart money accumulating are they starting to buy, right, as price moves down? Now, and I didn't want to make you think that, I don't want you to make you think that there was no buying here of smart money in this move down, just these 3 down bars. I believe there was, but ultimately a good position was put down here. This is like the ultimate, right? But they're going to put positions in here as well too, right? As this market is moving down. Okay.
And so I think that also brings up an important point, that even though you see there's potential for accumulation in there, that it takes a lot of patience to really let the price action make its move before you take any action.
Yes.
A lot of people act impulsively when it comes to trading, and I think that's one of the reasons why they lose money, is that they act impulsively, they get stopped out, they take multiple positions, get stopped out, instead of letting the price action dictate when to get in.
Right.
And so patience is probably on a level along with at least being skillful in looking at charts and doing the analysis.
Right. So let's start with another equilibrium concept here. So let me take this little rectangle out here. I can just get it out. Okay, let's look at this one. All right, and you can see how I got this marked. So here's the important here's the important equilibrium. We already see that there's clear rejection below that. There's no close below it. Note that there's no close below that.
Right.
Okay, closes are so important. Now notice this wide range bar, this last bar, right, just before price, and then price comes up, right? It opens up here at the bottom on this green candle, and during the day, so I'll take the arrow out of here. During the day, you can see there's a distribution right here, right? So price, triggers the buy stops that were sitting above that. So what I do is I take the open from the close, right? So this is an equilibrium concept. So we clearly see there's already buying below equilibrium. So we can safely assume now that anytime price goes below an equilibrium of a price structure, we should see buying, okay? But the thing that sets it up for me is the time frame. So for instance, if you look here, notice how this bar, so you see this red bar is actually the exact center of this wide range bar. Okay, so that's the equilibrium of this bar. It's the same exact concept. Now remember, if we could take that monthly structure that we're trading in and we could turn it into one bar, because it's going to have an open, high, low, and close. But it's probably going to be, if we could make like a 20-month chart, well, that just seems impractical. But the overall concept of time and price and a range is all encapsulated even in this one bar right here.
Okay.
You see what I'm saying?
Yep. And so what you're taking those two bars then, the red bar and the green bar right now?
No, just this one bar right now.
Red bar. Okay.
Yes. So
and you're taking 50% equilibrium of that.
Yeah, so here it is. Now notice price comes up and you see what it does. It closes above the equilibrium on this time frame.
Okay.
All right. That is a wonderful clue. Okay. So what this means now is the next day that price opens up, look what it does. It pulls back below the equilibrium and look what happens. Boom, it makes a higher high. See where the buying was at? It was actually below the equilibrium. So now think about it. Now we have this bar. We've already closed above the equilibrium of this bar.
Right. Okay?
So now we have two other bars that make up, by the way, my cat is going to start meowing. He's a Siamese, so please bear with him.
Puddles?
Yes, Puddles is awake. So he's been awake, but his cats are nocturnal. He has been awake for quite a while, and he's going to want someone to put him to sleep. So he might get a little audible here. Okay. So now you see what I'm doing here. Now I'm taking the other two bars and I'm combining all three. So basically I'm taking all three and combining, and I'm finding the next equilibrium. Okay. Here it is right here. So we have this bar, this bar, this bar, three down.
Why would you take those three bars and not the ones before it or the after it?
Well, because this is a bullish bar.
Okay, so you would include, if you're looking at the picture of the daily chart, you're looking at either three long bars or three bullish bars, the green, or three red bars. Is it always three bars? Is it sometimes two bars? Is it?
No, you're going to see that. You see how so it's always the down bars. Okay.
Okay.
So what I'm doing is, so we've already closed on the daily chart above this it's a wide range bar. Okay.
Okay.
And then we have a bar in between that has a down close, and then we have this one, and then here we have a bullish, right? So I'm taking just the three bars now,
The bearish parts. The
Yes.
Okay.
And see what I'm using, even though the rectangle is out here to the left-hand side, I'm lining it up with the open, okay? Because again, if I could make a 3-day chart, this is going to be one candle, okay?
Right.
It's going to be one candle, right? So yes, I'm looking at the daily candle here, this one candle. It's a wide range bar, price closes above it. So what this is right here is this is called a WRAB, wide range accumulative bar. So I'm taking all three in now, and it has its own equilibrium right here. So you can see how I have it. Here's the close.
I see. Okay. So there's, yeah. So so you're not looking at the wicks. You're only looking at the open and close of those 3 bars.
The open and closes, because the opens and closes is a truer representation, in my opinion, of price at the interbank level.
Interesting.
That's where the majority of the volume is at.
And that's true, I think, for any market. So it's either it's a specialist on the New York Stock Exchange, or it's the banks in the Forex market, or it's the market makers in crypto. No matter what it is, it's the smart money.
Right. And again, just credit to Mr. ICT for that, because he helped me to realize that. And I think it makes sense, because if you think about it, of course, the opens and the closes and the highs and the lows are going to vary from broker to broker. Right? They're not going to be the same. So in other words, if I went to FXCM feed over Oanda, there's going to be a variation in where the opens and the highs and the lows. But again, the opens and the closes are all I pretty much use using this concept.
Gotcha.